Hi, welcome to the East Asia Econ YouTube channel. I'm Paul Cavey. I'm the founder of East Asia Econ. We're a platform for tracking and understanding the big economies of East Asia. That's China, Japan, Korea, and Taiwan. We have a lot of stuff available to do this. We're based on a big data infrastructure, and that allows close tracking of everything to do with cycles and some of the thematic things that are playing out in the region. I'm going to talk today about trying to illustrate some of the insights that we can draw out from our analysis. And today I'm going to talk about the yen and ask the question of when the yen will ever start to appreciate. But before we get on to that, I wanted to ask 3 requests from you, people from watching the video. The first thing is, if you're interested in this video and you find it useful, please do subscribe and also recommend to your friends that might also be interested in similar topics. That would be greatly appreciated by me. The second thing is, if you're interested in these kind of issues, please do check out our website, eastasiaecon.com. On that, you'll find a whole range of resources available for understanding what's happening in the economies. There's some data visualizations, there's a ton of interactive charts, and there's also a lot of analysis you can sign up to get periodic emails. The third thing is, if you're a professional investor, then please get in touch with me directly for a subscription. We have a number of emails that come out most days. Again, we're talking about what's happening in the cycles across these economies whenever data is released, and also trying to think about some of the deeper structural issues. And the service is really designed for you. And so if you find this is interesting, then please do get in touch with me about a subscription. And with that, on with the show. So again, what I wanted to talk about today is the outlook for the yen. Now, I think this is interesting because if you go back over the course of the last 3 to 4 years, periodically, most of the time, I think, there's a bias that the yen is going to appreciate. And maybe there's a risk that the yen appreciates too much, and therefore that brings all of the kind of inflation stuff that's been building up in Japan crashing down to the earth. Now, despite that, we're in a situation now in 2025, going into 2026, where the yen is again at the weakest level it's been in real terms since the early 1970s, pushing up to a dollar yen of about 160 or thereabouts. So despite all of these expectations, and certainly at times I've had some of these expectations as well, that the yen would strengthen, in fact, it remains as weak as ever. So today I want to talk about some of the reasons for this, why the yen is so weak, and then secondly, think about what might change that and what would be the things we should be looking at to expect that the yen will start to appreciate. Now, a bit like in the other videos I've done, it really is the first part is thinking a bit more about the cycle. The second part of the video thinks a bit more about the structural drivers. So first of all, let's just review the cycle and where we stand in Japan. And I think to do that, it kind of is worth bearing in mind the chronology of events that have happened over the course of the last 12 months or so. So if we come into the beginning of this year, it looked like everything was ticking the box for the BOJ to continue to hike rates above the 0.5% level where it currently is. And above 0.5% is a significant level because that's the highest that rates have ever been achieved since the BOJ started to cut rates back in the 1990s. So this would be a significant event. Coming into this year, the labor market was tight. Inflation was running at about 2% and actually heading higher. Everything about the economy was ticking the right boxes to suggest that the BOJ could hike again. And then 2 things happened. One, inflation started to run a bit too hot in the sense that it started to really impinge on consumer confidence. So from the end of 2024 into the early months of this year, consumer confidence came down sharply, and that was directly correlated with an increase in inflation expectations as things like the rice price went through the roof. So there was too much inflation, or too much of inflation of the wrong sort of inflation, and that damaged consumer sentiment. It's a negative shock, therefore, for the economy. The other shock that Japan felt and was much more significant in terms of explicitly in terms of BOJ thinking was obviously the tariff shock that came from the US. So starting with the auto tariffs, Liberation Day, and then the whole thing of trying to get a US-Japan trade deal as we went through sort of the summer months of 2025. That was the other thing that caused problems for the BOJ. And in particular, again, explicitly in their forecast, the BOJ started to say from around June time that because of these tariffs, the outlook for the economy had deteriorated. They greatly reduced their GDP forecast for the next couple of years and said that this was something that was going to bring inflation down as well. So that was where we were through the summer months. Now, since then, as you look through sort of September, October time, both of these shocks were clearly lessening. So if you look at consumer confidence shown in this chart, there's clearly been a big bounce back in consumer confidence during the first half of this, from the second quarter really of this year. So significant change. And part of the reason for that was because inflation expectations stopped rising and largely the rice price started to come down a bit. There was a bit of a lessening of this sense that inflation was really going up very sharply. So that's one thing that changed. The one shock that damaged growth in the first half of the year, that began to fade. The second thing, and again, sort of more explicitly or better well known, is what happened with tariffs. So there was a tariff deal reached between the US and Japan in July. To get that, Japan had to sign up to some very onerous investment terms. That's probably the topic for another video, but nonetheless, a deal was done. Tariffs came down, they stand at around 15% or thereabouts, and that then allowed the whole of Japan really to breathe a sigh of relief that things really weren't to deteriorate further. And actually, if we look at the export data, for example, shown in this chart, it suggests that so far tariffs really haven't had a big impact. Like there has been a big change in auto prices, as some of you may have seen. So in terms of the actual auto prices of exports going from Japan to the US, export prices fell by as much as tariffs went up. That was the first reaction of the automakers. But if we look at overall export performance, like basically it hasn't done very much, which frankly is the picture of Japan's exports since 2020. They've been going sideways for a few years now. Exports aren't the big driver of Japan's cycle. It's much more about the non-manufacturing cycle. And on that point, if we then look at investment, what's happened with economic sentiment over the course of the last few months, apart from consumers, we also see it with business sentiment also bouncing back quite sharply, in fact, over the course of the last 3 months or so. And so coming into this year, coming into sort of November time, October, November, there was this sense that actually everything was falling again, once more falling into place for the BOJ to start to hike interest rates once again from that 0.5% level. And that would be important because the BOJ has to care for inflation. It has to give investors confidence that it's not getting behind the curve, that real interest rates aren't too negative, and it cares about the direction of inflation from here. So that was where we were. And then there was an LDP election, a new Prime Minister, Takeichi, was elected, and suddenly things changed once again. So the new Prime Minister came in, and not only, was she well known as favoring sort of Abenomics and sort of an Abenomics approach to the economy, so fiscal easing, monetary easing, and so on, but she also surrounded herself with advisors who spoke out very loudly on three specific issues. One, that there should be fiscal easing. And obviously, Japan is one of the most indebted countries in the world, so that is significant. The second thing is that the BOJ should go easy in terms of monetary policy tightening. So there had already been a pause, at least in my view, in the BOJ's hiking cycle because of what happened with tariffs. Now you have advisors close to the Prime Minister saying that interest rate hikes shouldn't come because the economy is still too weak. Now, the BOJ is officially an independent institution, but everywhere politics matters. So this is something else that we have to throw into the mix and think about where the BOJ goes from here. The third thing is that, again, those advisors very specifically saying that a weak yen is not actually negative for Japan, which seemed like quite a turnaround given where the yen had been, and that had been causing a lot of angst for people at the Ministry of Finance and the central bank, to the extent that the Ministry of Finance had actually intervened on a few occasions to prevent the yen from selling off even further. So this was quite a turnaround. And what's happened since then is that the yen has, unsurprisingly, depreciated once again, and now is then back up, heading towards 160 to the dollar, again the weakest level it's been since the 1970s. And so we're in a situation where once again I think the BOJ has been, at least for the moment, looks like it's been foiled, and one of the results of that is the yen is weak. The yen pushes up in inflation once again, and we're still very much in this inflationary real rates being too low, and therefore the currency sells off. And that's the situation we're in today. So where do we go from here? How can we get to a situation? Is it possible to get to a situation where the yen can start to appreciate? And I suppose there's a couple of things to be thinking about, in terms of just getting a sense of the fundamentals. One, it's important to remember that Japan still is a very big net foreign creditor. If you think about the current account position, Japan's current account surplus is now the biggest it's been in several years. That's largely because of income flows from the rest of the world. But it's not like some people give parallels with the UK, with the Liz Truss moment and the sell-off that happened in the UK then. Like Japan, I think, is a bit different from that from a currency perspective because it does run a current account surplus. It is a net foreign creditor. The UK runs a current account deficit and is a net foreign debtor. So I think that difference is important. The second thing, in terms of thinking about the fiscal position, I do think it's unwise to boast about having a big fiscal ease when the economy looks like it's already doing quite well and inflationary pressure is strong. That said, I think some of the fiscal issues have been over-exaggerated for Japan, just in the sense that in the course of the last few years, for the first time in a while, there has been some improvement. That can be seen in the gross debt ratio relative to GDP declining. Again, some of that is because of deflation, but nonetheless, that's one of the things that the government has wanted to achieve. And the second thing is the fiscal deficit has been closing. It still is in deficit, but there has been some improvement. And I think when thinking about the fiscal package that the government has introduced, one of the problems in Japan is there tends to be very little transparency around exactly what's going on. And at least for me, I've tried hard to find the numbers, but it's difficult to get a very good sense of what this means for the fiscal deficit in the course of 2025. So there are, I think, a couple of things to be sort of bearing in mind when thinking about the fundamentals here. Now, leaving that aside, let's think about then again what would get the yen to start to reflect less on the fiscal side, but more on the external side, the external creditor side. What would get the yen to reflect some of those fundamental strengths that it should have? Now, one thing is more sensible fiscal policy in terms of having a clear target for the fiscal deficit to continue to close and for a level of fiscal responsibility that hasn't been appreciated in the first few weeks of this current government. That, I think, is important, and I don't think we have that yet. The second thing, though, is fiscal policies aimed at actually achieving a real change in the way that the economy works. And I've talked about this a bit on previous videos, right? If you think about the macroeconomy in Japan, I've said that it's ticking a lot of the right boxes. Economic sentiment is rebounding. Businesses seem like they're quite confident. Businesses in the non-manufacturing sector in particular feel quite bullish about the future. So this is quite positive. The one area that I think that hasn't been reflected is in consumption. And so if you look at aggregate consumption, as this chart shows, aggregate consumption in Japan really hasn't increased since COVID. It still is below the pre-2019 level. So it's quite extraordinary, really. And because of that, because consumption isn't growing at an aggregate level, that means the economy also isn't growing. And so if you think about the reasons why the economy, you can argue that despite some of these things where I would argue that they're very much ticking the box for the BOJ to be hiking rates, you can certainly say some things where the economy remains weak, there isn't enough demand, and therefore the government the BOJ should be going slowly in how much it tightens policy from here. Now, I think this problem with consumption is something which is often misunderstood. If you look at consumption on a per capita basis as opposed to an aggregate basis, actually per capita consumption has increased quite nicely since COVID. So one of the reasons why aggregate consumption is weak, one of them is because the population is shrinking. The other reason why aggregate consumption is weak is because the aggregate share of income that households earn in the economy has been falling on a multi-decade basis. Now, if you think about consumer incomes and household incomes, it basically has three components. One is what's happening with wages. One is what's happening with the income they earn on their financial assets. And the third thing is what's happening with social security policy. Now, if we think about those three things, the first thing, what's happening with wages, it does look like wage growth is continuing to remain quite strong. Like the data is a bit iffy from month to month, but the general picture is the labour market is quite tight. Wage growth is reasonably strong in nominal terms. Over the course of time, given that the population is shrinking, you would expect to see the returns to labour increasing at the expense of the returns to capital. I think that's something that makes sense, unless you can imagine that there's going to be huge substitution between capital and labour over the course of the next 20 years or so. So I would imagine that we start to see the wage share is starting to grow in Japan as we move forward. The second thing is returns on financial assets. Now, returns on financial assets is one of the things that we're seeing interest rates start to increase in Japan. The equity market has been doing well. Property, particularly in Tokyo, the property market has been very strong. Again, a reflection that real interest rates are too low. And actually, if we look at the data, it does look like the return, the incomes that households earn from their financial assets, that's also beginning to go up. So both of those things are positive. The one thing that hasn't really happened yet is the third thing, which is the social security and the transfer payments that the household sector gets from the rest of the economy. Now, in this recent budget, this fiscal ease that the new government has introduced, there are subsidies for the household sector. But what I think is more important, a better way, at least in my mind, of doing this, will be a fiscal policy that is financed by allowing greater taxes on the corporate sector to allow more sustainable and substantial transfers to the household sector. That, I think, at least in the debate so far, has been missing. And if that was to start to happen, it would be able to say that we're having wages increase, financial asset returns are rising, and there was a return in terms of household incomes growing as a percentage of GDP because of government transfers. Those three things, I think, would set in motion a story where we can see aggregate consumption in the economy starting to rise in a way that hasn't happened until now since the COVID crisis. Now, why does that matter for the yen? I think it comes back to really thinking about the BOJ. Now, the BOJ is going to have to demonstrate independence. If the government is saying interest rates should be kept low, and the BOJ thinks that interest rates should be going higher, then it has to declare. It's going to have to show that it has independence over the course of the next few months. And I think if we look at the debate around the BOJ, some of the policymakers, the board members who come out with speeches, they do tend to be leaning pretty hawkish. I mean, two of them are pretty obvious because they've been voting for rate hikes at the last couple of meetings. But even in terms of some of the other members of the committee, they've also saying that they're close to a time where interest rates should be going up. And again, I think that then puts this December meeting very much on the agenda in terms of thinking what the BOJ can be doing next. That said, I don't think one interest rate on its own is going to be enough. Put that another way, I think if it's a dovish hike from the BOJ that they're raised from 0.5% to 0.75% and say, well, the outlook is very uncertain, we've got to be careful about doing anything further, like that's not going to be enough to change the trajectory for the yen. I think there has to be this situation where the market can start to price in the BOJ having a positive story about the economy that takes interest rates through 1%. Now, I think that positive story was visible for a period of time, quite a short period of time, but in the middle of 2024, when there was an interest rate hike, the BOJ sounded like it was on the path where interest rates should go higher still. And then what happened? The yen appreciated too much, financial markets came down, and the BOJ seemed to get cold feet. That was the first sort of volatility that we saw with the BOJ, the second one with the tariff stuff that happened about a year later. But before that, I think it's not impossible that we get to a situation where the BOJ isn't just thinking about rates going to 0.75%, but is thinking about rates going. The market can start to think that the BOJ is going to hike further than that. That, I think, is probably the prerequisite for having a situation where the yen can start to strengthen. And I think one of the things that would support that is having an environment where the outlook for aggregate consumption is really starting to improve. And the BOJ can see the whole economy, because without consumption, the whole economy isn't going to expand, but can start to see GDP overall starting to perform more strongly over the course of the next few years than it has over the course of the last few. So I think in that, fiscal policy is important, but not an aggregate fiscal ease, but rather a change in the fiscal policy that takes some money away from the corporate sector and gives more money to the household sector. Now, so far from this new government, we've only had a supplementary budget. We haven't had the full budget for 2026. That's going to be the subject of debate because the LDP is not a majority government. It has to debate with the opposition parties. And so that certainly lays out some uncertainties about where the budget might go. But to my mind, I think we're still in a situation where the yen does remain weak. I can't see a good reason in the short term for that to turn around. I think there is risks around the BOJ hiking in December. But again, the thing I think I would be looking for is signs that consumption is starting to strengthen on an aggregate basis. That, I think, starts to change the agenda around macro in Japan and therefore starts to change the debate around the BOJ. Now, again, I'm Paul Cavey from East Asia Econ. This is part of the analysis that we do about all of the economies in the region. If you're interested in that, then please check out the website. And if you have any questions, then please get in touch with me directly. Thank you very much for watching.